Unemployment has plunged to 3.5%, with nearly 90,000 jobs added in June. It's the lowest rate in nearly half a century. Let's get some analysis on that now. Joining us is economist Stephen Hamilton from George Washington University. Stephen, thank you for joining us. It was a bigger drop in the jobless rate than some had predicted. Are you surprised by today's figure?
Yeah, when I refreshed the ABS website at 11:30 this morning, my jaw just about hit the floor when I saw 3.5%. So, it got stuck at 3.9% for a few months. And I think I have to say, I certainly expected that to be the floor after that, and was shocked to see it drop below 3.9. So last month, we had a big increase in employment, but most of that came from participation. It dragged more people into the workforce rather than by pulling the unemployment rate down. But this month, a huge amount of that came out of unemployment. So that's really amazing to see. It's fantastic. More people have jobs than ever before. We have an employment level that is where it would have been had the pandemic never happened and employment continued to grow at pre-pandemic levels. So, all of that together, I think is pretty extraordinary. And certainly the people who have jobs now should be very pleased about that.
Absolutely, you're right. It is truly extraordinary, particularly given under the current economic circumstances. So what is driving this, do you think?
Yeah, look, it's a bit confusing. So I think there's a lot of confusing signals that people who don't know a lot about economics are probably kind of baffled by, right? We have a lot of talk of recession. We have interest rates. People are feeling the pinch, and yet we have this really gangbusters labour market. So the way to understand all of that is actually these negatives, the interest rates, the inflation, the cost of living pressures. They're all kind of the costs of a very, very hot economy. Right, so we have a really hot economy. We have a huge demand for workers. We have massive, vacancies for jobs, and that's pulling that unemployment rate down, which is great. But on the other hand, because firms are finding it so hard to get workers, they're having to pay them more, right? And we haven't really seen the wages pressures start to build. We've seen some signs of it, but my guess is with an unemployment rate at 3.5%, we're going to start to see some serious wage growth. And that kind of thing is going to press on the Reserve Bank to raise interest rates because they worry that it'll flow through into higher inflation.
Okay, so given this, the situation with inflation as well, is a 0.5% rate hike next month going to be enough?
Yeah, it's a great question. So the last 2 months, the Reserve Bank has raised by 0.5% each month, percentage points. I was calling for them to raise by more last month. I said last month they probably should have raised by 75 basis points because I think that the RBA has consistently underestimated inflation. They've consistently been behind the curve on this, playing catch up, right? So they started late, and even with their first increase, it was only 25 basis points. Then they thought, we're bringing out the big guns with 50 basis point increases. And yet overnight, we see the Bank of Canada raise interest rates by a full 1 percentage points in one hit. The Fed has raised by 0.75 and are looking to move to 1 percentage point in the next round. So, every other central bank in the world facing these same inflationary pressures has tried to get ahead of the curve and act boldly to send the signal to everyone that they're very serious about inflation. And the RBA has been playing catch up the whole time. So I hope, certainly if we get a really strong inflation number at the end of this month, I hope at the next meeting they finally get serious about tackling inflation.
Stephen, it's already happening in the US. Inflation in the States hit a new 40-year high overnight. Is it a sign of what's to come here?
Yeah, it's a really important point. So I think to date we've had, the RBA has certainly said over and over again, inflation is much lower here than in other countries. But, if you think about it, the fundamental conditions aren't that different. We have massive demand following on from the pandemic, right? Everyone had their kind of demand on hold for 2 years while the economy was shut down. We've reopened and we want to do all sorts of things that we couldn't do before. In addition, we've had massive fiscal and monetary stimulus. stimulus, of course, demand is pressing hard up against the constraints in the economy. At the same time, we have really, really tight supply constraints, right, due to the war in Ukraine, bottleneck supply issues coming out of China with COVID restrictions. So, the combination of these two things has put huge pressure on our economy. And the current inflation number is unknown, right? So we haven't had a read on inflation since March. So we're months and months behind understanding the current state of the economy. I suspect, the US is at 9.1. I suspect we're headed in a similar direction. And again, in 2 weeks, when we get the next inflation figure, we'll have sort of a better read on just how hot the economy is running.
And can you at all see the US now avoiding a recession, or is it possibly inevitable?
Yeah, look, nothing's ever inevitable. And no economist, a smart economist, would ever make certain predictions of the future. But 9.1% inflation is very, very high, and we have to be clear. Not all of that is sort of temporary. Not all of that is Ukraine. Not all of that is energy, and will just go away. The core CPI month over month actually rose really robustly in the US, which means that there is some really strong momentum behind that inflationary increase. And that's the issue, right? It means that interest rates are going to have to go up so much faster and so much higher to get that under control. And yes, absolutely, there's a chance, certainly, that economic growth goes backwards for a couple of quarters. There's a chance that unemployment is going to have to rise to get things under control. And I think for Australia, the focus has to be avoiding that outcome. We've been behind the curve. We need to get ahead of the curve before we sort of fall into the same trap.
Absolutely. And let's hope Australia gets there. Stephen Hamilton, thank you so much for joining us.
Pleasure.